Hello traders, welcome to another crypto market update. Hopefully you're having a great day. Like always, we're going to start off with some news articles. We have two key news articles that we will be discussing today, and then we'll dive into the charts looking at Bitcoin, and then going into the alts like Ethereum, Ripple, Link, BNB, and others. So we always get our news articles from our Discord. If you don't know about our Discord and this might be the first video, we have a free community held on Discord. We have a Panda bot that posts any relevant news topics involving cryptocurrencies in our Discord, so you can always stay up to date on the news, as well as us as a team post frequent updates on the price action, so you get a well-rounded, all-around update, both price action as well as fundamentals in our community. So hopefully if you are interested in cryptocurrencies, you will check that out. It's free to join, absolutely. So first thing we're going to talk about is Bank of France launches experiment program on central bank digital currency. So we've already talked about and seen the United States talk about a potential central bank digital currency, and now we're getting the Bank of France experimenting with this new technology. So let's dive into the article here. As a number of global jurisdictions like the Bahamas and Sweden are already testing their central bank digital currencies, or CBDCs, French central bank is getting more straightforward regarding its own CBDC plans. So just in that first sentence, we can see that Bahamas and Sweden are already testing central bank digital currencies, and they're saying like it's just a few off the many that are on the list, and then now France is now getting more straightforward and creating its own experiment and trying to understand how to implement this technology within their system. Let's continue reading. The Bank of France is now officially launching a program of experiments to test the integration of a central bank digital currency for interbank settlements, inviting potential participants to submit their applications. So they're not actually creating it themselves. What they're doing is they're just offering people who live in France to try to come up with a way to solve this issue. So in my view, capitalism, having private companies, compete with another to try to be the best is a really good way to have innovation, rather than a completely government-controlled entity, which you're not going to get much done. Let's continue reading. According to a March 30th document, France's central bank is calling for applications to experiment with the use of a digital euro, aiming to explore the potential CBDC opportunities for clearing and settlement of tokenized financial assets. Although the Bank of France previously called for blockchain-based settlement systems in Europe, the bank said that it doesn't impose any specific technology within its newly announced CBDC experiment program. So they're not saying we have to use blockchain. We're saying we're open to whatever technology is available that will provide us the necessary tools to try to basically aim to explore the potential CBDC's opportunities for clearing, settlement, tokenized financial assets. So that's their goal, and they're open with how to get to that goal. So we see three use cases to be explored. The bank's CBDC's experiment has three objectives, such as modeling a CBDC-based interbank settlement and identifying benefits and analyzing the potential risk. There's definitely going to be a lot of risk with this huge shift. It's a new technology, and with anyone embracing new technology, it takes time, especially for the older generation. Let's keep on reading. Among three potential CBDC use cases, the Bank of France outlines payment against financial instruments, payment against other central banks' digital currency, and payment against digital assets. So they are actually putting digital assets within the three potential use cases for their digital-backed central bank digital currency. And we can say the bank emphasizes that it will no longer engage in money creation within its CBDC experiment. So this isn't going to affect the supply the circulation supply of money within this experiment is just going to be testing how it's going to be used. Additionally, the central bank noted that it will be destroying the tokens reflecting the amount of euros in digital form at the end of the accounting day on which payment was made. So they're basically taking out the supply, so they're not inflating the currency, which is a good thing. The Bank of France also highlighted that it doesn't plan to apply any project on a wider scale, stating these experiments will not act as a contribution to the Banque de France to a broader discussion within the euro system, which will make any decision on whether to set up a CBDC. The tests are not intended to be continued on a long-term basis or applied on a wide scale by the Banque de France itself. So they are stating that it is just a test. It's not something that they are implementing or wanting to implement anytime soon, but it is going to be something that is able to give them data on how they could potentially navigate through implementing blockchain or some form of new technology within their current system. Let's continue reading the last paragraph. On December 4th, the bank governor, I'm going to butcher this name, Francois Villori de Gahou reportedly announced that the bank will start testing the digital euro projected by the end of the first quarter in 2020, which is now, basically. Previously, Denis Beau, the first deputy governor of the Banque de France, pointed out that blockchain technology could facilitate a number of financial and payment processes, including cross-currency settlement. In early March, France's markets regulator, the Autorité des Marchés Financiers, proposed a regulatory sandbox to experiment and explore potential of security tokens within the European Union. I'm sure I butchered those names. But we are seeing central banks, governments look to implement this type of technology within the European Union, within major sectors within the banking world, looking at what we saw last time, applications to clear and settle, opportunities for clearing and settlement of tokenized financial assets. So if they tokenize financial assets, that could mean almost all financial assets, because you could tokenize really anything, real estate, shares, any real asset, right? It's just putting it on a ledger and tracking it. And yeah, it's the shift is happening here for sure. You see it a little bit hidden in some sense. As long as you're looking for it, you see it, but not a lot of people are talking about what central banks are actually doing to try to implement this technology, and the fact that they are just validates the technology even more as something that is revolutionizing the world. Not could be, because it already is. People are taking action to try to change the current system they have in order to basically survive, because if you're not adapting in this world, you are dying. So that is the first main topic we wanted to talk about. Second topic of the day for the news, and then we'll go on to the charts. We're going to go on to Bch Bsv block halving will force miners to Bitcoin. So this is going to be looking at the halving for the two coins we talked about, BCH and BSV, and how their halving is before BTC, and then talking about the miners mining these coins will have to move, or will want to move, to BTC because of just the cost of mining versus the reward that you're getting. So let's continue on. I'm going to get a little quick drink of coffee, and then we will continue. All right, so let's read this article. Bitcoin, or BTC, miners will continue to capitulate due to low prices, but upcoming events for Bitcoin Cash and Bitcoin SV will fuel the turmoil, says a new forecast. So we've already talked about the miner capitulation in a previous video, talking about the hash rate dropping 16%, which is a very significant drop, and what that means for the less efficient miners, because if the price of BTC drops, you still have to pay for your operational costs, electricity, heating, or cooling, if you're in a hot place, like a facility itself or real estate or, paying employees and all this stuff. There's costs associated, right? And that is most likely all going to be denominated in fiat currency if it's US dollars, if it's in America, or yen if it's in Japan, whatever the case may be. And when the price drops, when these not as efficient mining facilities are mining Bitcoin, let's say, not as efficient as others, when the price of BTC drops, they're now going to be mining BTC at a loss each time they mine, because it's at a certain point, Bitcoin is going to be too low for them to mine and they're losing money. So at that certain point, there's going to be a capitulation where a lot of miners sell because they want to get out of the currency that is going down or the asset that is going down to pay for the costs of the actual operation. And to put it simply, that is miner capitulation. Let's continue reading. In the latest edition of its State of the Network reports, on March 31st, the Coinmetric argued that Bitcoin was in a spiral of miner capitulation. This, it is said, would get worse before it got better. So we talked about this before the drop, and we made some awesome trades from that. And it now rallied back up, and we're going to talk about a potential opportunity that we're seeing very shortly here. But first, we're going to go through this. Coinmetrics expect pattern of capitulation. Despite BTC USD recovering over 70% in 2 weeks since hitting the lows of 3,700, prices are still almost certainly declined below the break-even price for less efficient miners. So this is very important. This is supported by the recent drop in Bitcoin's mining difficulty, which is nearly 16% of the largest negative move since 2011. Before the mining sector recovers, more pain is in store. So this is talking about the hash rate. The hash rate dropped 16%. And I believe this is it right here, where this is the difficulty level. But if you're interested in that before the drop and what we were talking about, check out the previous video. We expect miners to follow a cycle of decreased profit margins, increased selling capitulation, and a culling of the least efficient miners from the network, the report summarizes. So, like any cycle, even in trading, you're going to get recessions that are going to shake out the weak hands. And then the true holders are going to be the ones holding and riding out for the long haul. And that's kind of what you see here. You got people come and go. You're going to have less efficient miners come and go, but you're going to have the long-time veterans who are going to have those low prices that are going to keep the network going when these big drops occur and when basically all the weak hands, all the less efficient miners get swept off the network. So, little quote here. Once the cycle is complete, the miner industry should return to a healthier state that is supportive of future price increases. So it needs to happen just like any other cycle. Just like after a bull market, you need a bear market. After a strong mining market, I guess I don't really know if you call a bull market, you're going to have pullbacks, right? So that is, like anything, just a cycle within the market. So let's read here. This is more getting into the granular details of the opportunity that could be presented here. So in the short term, however, turbulent times will continue to hit miners and impact Bitcoin. This is the important part. Next month, hard forks BCH and Bsv will both undergo a block reward halving, reducing the number of coins awarded to miners each block by 50%. BTC has this as well. Bitcoin's own halving will only occur in mid-May and will have the supply of miners from 12.5 BTC to 6.25 BTC. So there's going to be a 1 month window during which miners will direct more hash power to BTC as its block reward will be higher despite the increased cost, says Coinmetrics. So what's currently happening right now is you have miners that are mining BCH and Bsv, but they are going to have to They're going to undergo a halving, which is reducing the number or reducing the amount awarded to miners by 50%. So let's say they're using a unit of energy to get a unit of BCH or Bsv. After this halving, they're going to use 1 unit of energy to get half the unit that they used to of the asset that they're mining. which in this case would be BCH or BSV. So for this month, if they're using 1 unit of energy, why not get equivalent almost to 1 unit of assets that you get before the 50% cut of the reward? Hopefully that makes sense. So miners don't have to start mining BTC, but even with, the only month, given only a 1 month window, if you were a business owner, would you use 1 unit of energy? Would you pay for 1 unit of energy to get basically 1 value of asset, or would you get 50% of that for the same cost, basically? Well, of course you'll get the higher reward. That makes sense, right? You're spending $100. Would you rather get $50 or $100? You'd rather get $100, right? So in this case, the people that are going to be more nimble, that are going to try to make short-term money, are going to switch to BTC, because for that 1 month time frame, it does make sense in terms of the cost to actually operate the business and the value that you're getting and the amount that you're getting in return for the energy that you're spending. It makes sense to get that full instead of the 50% for BCH and BSV. So to be completely honest, I don't know how much this is going to impact the price, but we do see it does go with our hash rate drop thesis of BTC dropping even more. And we'll talk about that in the charts, but let's continue and finish this post. We got one more thing to go, one more paragraph here to go. When Bitcoin Cash and Bitcoin SV have their block rewards, this should force miners to direct even more hash power to Bitcoin, as it will still have a 12.5 native unit block reward instead of 6.25 for about a month longer. Therefore, we should expect difficulty increases for Bitcoin that should further squeeze profit margins for all miners. So another capitulation is potential here. And we don't want to have too much of a bias in the market, but this does actually create a quality confluence with our overall technical analysis that we have for Bitcoin. And we'll talk about that when we get into the chart. So that is going to be the 2 news topics that we're going to be going over today within our crypto market update. And then now we'll be going over the trade that, or the charts that we're going over Bitcoin. And then we'll go over BNB or Binance Coin, Ethereum, Link or Chainlink, Ripple, XRP, or EOS, and EOS. I'll be going over all of them. So let's start off with BTC. I'm going to get a little bit of drink of coffee, and then let's start the analysis. All right, so let's just talk about the 4 hour and then go over the 1 hour. We talked about the larger time frames at the start of the week there, so we're going to mainly focus on the smaller time frames here, what we could be seeing for tomorrow, the day after, even today, something around that. So we're swing traders, and that's what we're going to be doing. So right now, we went from a ascending wedge, which we saw right here. This was the ascending wedge, and we did get a great entry on that. But what surprised me and what gave me a little bit of hesitation to be looking short is the fact that we held this support very strongly. We can see it was initially a support back in the 23rd of March, and it was around the $5,900 zone, which this was a head and shoulders. We can see right here, left shoulder, right shoulder, head, and we actually broke out, retested, and pushed back above the breakout zone. So the $5,800 zone there showed me, wow, that's a pretty strong zone. It completely rejected the head and shoulders that was appearing right there, and then pushed the price higher. So that showed me that there was a decent amount of buy pressure around the $5,900 zone. So then when we did get that entry right here to our first take profit, I took profits at that $5,900 zone. I initially had the take profit a little bit lower, but once it consolidated at that zone, I was like, man, this $5,800 level has been a strong level of support. Not just once, we saw another wick right here, but we also see it yet again hold that price. So for me, that's going to be the breakout area that I want to see the price break before I look to really add on size. But that doesn't mean that we can't have a possible entry from a short here, because I see 2 situations. We already talked about one on the 4-hour chart yesterday. First, we have our descending zone with 3 touches, 4, 5, and then 6. So we have a descending zone connecting the lower highs here. And we have that horizontal zone of support that we already talked about, that 5,900-ish zone right around there. So what is that? Very easy to spot descending triangle pattern. And then right now we're at a key level of resistance. Previous level of support, new level of resistance in confluence with our descending trend line that's connecting the lower highs. Pretty decent spot for a short opportunity, so we will talk about that on the 15 and the hour zooming in, but we're just still talking about market structure. So right now, in my opinion, the higher probability situation would be for the price to go from around where we currently are to test that support, continuing the trend in the descending triangle. Now, another pattern I also see, and this is more easily seen on the daily, is a head and shoulders right here. Might be a little bit hard because on the 4-hour and even the larger time frames, not including the daily, this is actually still a candle body, but on the daily, you see this is the wick. So you see candle bodies right here, you see candle bodies right here, and you see candle bodies right here. And we'll talk about that on the daily, but understanding the structure of the head and shoulders right around here, that is the potential opportunity for the continuation to the downside, in my opinion. Now, doesn't mean that it will happen as a guarantee, but in my personal opinion, this is the potential left shoulder, this is the head, and we're now creating a potential right shoulder top, and we're just looking to see if the consolidation will come back to around the $5,800 zone, and then if we're going to hold, if we're going to break. If we break this zone, break this horizontal level of 5,900, we are going, in my opinion, to get a strong push to the downside, because we have A, completed the head and shoulders, and B, this ascending wedge is still in play, in my opinion, and this is just a longer drawn out consolidation before the wedge actually inevitably does drop to our full expected range, basically. So that is going to be the outlook that we have for BTC. Now let's look at the smaller time frames. So we're pretty bearish. If we do break the around $6,500 zone, we will have to change our bias, because the price will come up to the $6,800 resistance right around here. If we do come up to that zone, then we'll have to change our bias, because the descending triangle will be invalidated. But as long as this price sticks around where we currently are, my thesis is going to still be valid, and I'm going to be trading it until something else happens. So let's talk about the consolidation. Actually, let's first talk about the head and shoulders, and then we'll talk about the consolidation on the 1 hour. Hopefully you can see it very clear as day right here. This is going to be the head and shoulders we see right here. This is going to be the breakout zone, so the $57-ish $100. We see the left shoulder right here with bodies of the candles closing right there. We see bodies of the candle closing for the head at the top, and then yet again you see bodies of candles closing within the middle of the zone. So right here you see the left shoulder, the head, and then now the right shoulder is getting created, and it's just a matter of if we're going to tumble down back to the 77, and then if we are going to break that zone, I think it wouldn't be too hard to assume that we're going to test back to these lows of around 5K, if not overextend further, creating a kind of pattern like this where you get a pullback and then another leg down that is even greater than the previous low, making a lower low. And I think from this point, if it does make that trade from our lower low, will be very significant and very quick. So we will want to make sure that we are trying to look for opportunities if we do see kind of a rollover occur. So we see a push, this is a pullback, and it's a rollover for the next lower low. So we see an ascending wedge that already broke out, which is pretty bearish. We do see some consolidation within the markets right now, but if we do get another leg down, this ascending wedge pattern is still in play, which means that this is just a consolidation from a bearish consolidation, bullish consolidation, to now bearish again. So the overall structure of the market will look something like this, right? So then you get a low, you get a lower high, and you're expected to get a lower low. So that's going to be the overall outlook for BTC, in my personal opinion, if it does break this head and shoulders, that's a pretty high probability that we'll get a rollover, minimum testing that 5K zone. But if it does hold above the 59, we will have to shift our bias because we will have to assume that this is a very strong level of support. But that's going to be the daily, and then looking at the 1 hour. So understanding the daily, you're probably, if we're looking at shorts at around this zone, we're probably wanting to take profits at around the low there, because this is a large descending triangle and we don't know that it's going to break the support. We can have a speculation because our longer term bias is bearish, but at the end of the day, we want to make sure that we are capturing profits because this move is pretty significant. So let's dive in on a possible opportunity here that we could be seeing, knowing the larger time frame outlook of the trade, because that is very, very important. And also the fact that we're trading within a zone, so we are trading within a descending triangle, right? So when we're trading within larger patterns, in my personal opinion, I have less dependability with them, so I'm going to be lowering my position size a little bit because I want to conserve my capital for then when I have the very high probability situations when I'm breaking key structural zones. I have that capital to use to my full capacity when I have the highest probability setups. Gonna get a little bit of coffee and then let's continue on with the 1 hour. Alright, so this is the major zone that we're currently holding below. The descending trend line, we see rejection, 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 rejection. A lot of sell pressure at this zone. What else do we see? We see sell pressure at a horizontal level within our consolidation. Initially, right here, this is our initial resistance zone. As we can see, we see 1, 2, 3 rejections pretty well, and then we see some higher lows coming into the market, squeezing the price and then pushing up. That previous resistance is now acting as a nice new level of support, as we can see. Now, we're getting a squeeze here in the price because we have a level of support that is holding the price above a certain level, which is looking like it's around 63.50. And then we're getting lower highs, which is squeezing the price lower. So now we're getting the market to have to make a decision. We're either going to move to the upside or we're going to move to the downside. So if it moves to the upside, in my personal view, I'm not going to be looking to long because my overall bias is going to be short. But if we do get a break of this support to the downside, we have a pretty good opportunity in our hand because we already have a lot of resistance here. So if it does break to the upside, we're going to have a shift in supply and demand anyway. So that means that if we're able to get the supply demand to shift via making a lower low, breaking the support, everyone who bought in here is now in the red. So there's a lot of people who bought in that consolidation, I'm sure, looking for that next leg to the upside. And I'm sure there's a lot of stop losses here, so we're probably going to get some level of an aggressive move when it does go down. And we're going to be looking for the lower low, lower high structure, meaning we're looking for a lower high. A lower low, and then we're looking for a lower high to confirm the previous resistance and support as another level of resistance. So we're going to look for that pullback. We're going to look for the completion of the exhaustion move on the pullback before we look to enter short. And hopefully by that point, there's going to be a lot of sell pressure that's going to dump the price down to its around $5,900 level of support. So that's going to be the overall outlook that we have for this trade. It's too early, in my opinion, to be looking for any shorts, but it's looking like a good opportunity on the 4 hour. We can see very, very nice zone of confluence, and we've been holding that zone for a while. And you know, it's looking like another miniature version of this zone, a nice little miniature volume distribution area. We're seeing very, very limited amount of volume come into the market, and overall, I do think we're probably going to have a bit of a pickup and then a dump down, and then hopefully we're going to have a little bit of a pullback before the actual meat of the move comes in and pushes the price down towards the $5,900 level of support. And then just looking at potential risk rewards, let's actually do that on the 1 hour time frame. Obviously, we don't exactly know how it's going to be playing out, but let's say it does something like this. So let's get our brush. I think, yeah, that's fine. Okay, so let's get our brush here. And let's say it kind of does something like that. I don't exactly know, but you know, I think we will have some sort of push to the downside. I want to see the sellers hold the price there, not just a wick. I don't want any wick. I want to see the price hold, and then I want to see a retest validating the descending zone and the horizontal zone as a new level of resistance. Yet again, validating the zone. We might get another double top just as the last little entry point here. That would be a pretty good opportunity, and then we're probably going to hold some level of support, and once that dumps, we're probably going to get a pretty sharp aggressive move, because then that'll confirm the lower high, lower low trend, breaking supports, holding resistances, creating that bearish momentum to the downside. So if that happens, let's look at potential risk-reward situations. Entry would be after the validation of that resistance, so probably somewhere around there. We don't exactly know. And then for me, stop loss is probably going to be at the recent high, so it's going to be at these wicks just right here. So let's grab our rectangle just like so. So this is going to be where my stop loss is going to be above, just above there. And then I'm going to have my take profit at around right there. So it's going to be a trade of 3-to-1. And if it does go below this zone, that's great. But I am going to be taking probably 50%, a majority of my profits at that zone because of a key level. And then if we do get a break of this major head and shoulders pattern, break the downside pullback, you can always re-enter. That's not a problem. But, you know, capturing a 3-to-1 risk reward with a 7%, almost 8% winner is definitely not something to complain about. But because of this rejection of this ascending wedge, I do think that it is smart to be taking a decent amount of profits at this zone, because we've seen a test 1, 2, very, very strong push right after hitting it, right? So not saying 100%, like I didn't take 100% of my profits here, I took 50. But 50 is a significant amount if we're getting an entry here. And even if we're getting an entry here, still 50% take profit at 7% is pretty damn good when you're only risking 2.5% with a risk reward of over 3. So that is going to be the potential trade that we're going to have for BTC. If we don't see it, if we move to the upside, our bias is going to shift. We're not going to be FOMOing or anything. We have a specific set of criteria that we're looking to implement and looking to have within the market. If it doesn't show up, we're going to dismiss it as something we're not wanting to take. So that is BTC. Hopefully you got something out of it. It's looking pretty favorable for a potential, but I still think, in my opinion, it's still too early to look at. All right, next thing on the list is going to be looking at the longs and shorts for Bitcoin really quickly. We can see that the longs, still no real entries for the longs, and then sellers are kind of stagnant because the price is just going sideways. There's not going to be a lot of movement for buying and selling if there's no movement in the price, obviously. A lot of uncertainty with both buyers and sellers, so we're just stagnating sideways for now. So that's Bitcoin. Let's discuss alts now after I get a little bit of coffee. Gold's going down. Silver is probably looking like a good opportunity at this point. We'll talk about that in the global macro update. Gonna get a quick drink of coffee, and then let's start our analysis on these alts here. All right. BNB is the first one. All right here. Let's zoom out and understand where this descending green line is coming from. Okay, resistance, support. So it wouldn't be too surprising if we do get a pullback to this zone. We see a little pullback here with some higher highs and higher lows, probably a nice wedge of some sort. As you can see, probably a nice wedge. Not perfect, but, you know, BNB, we had some troubles identifying a nice area for a key level of ascending support, probably right around there. So we've clearly broke it, and a lot of these alts are going to be in a similar position to Bitcoin, where we've broken an ascending zone, and now we're in consolidation sideways. We can see BNB is in the consolidation from $13-ish, maybe just above $13, $13.10 to around $11, and we're kind of right in the middle of a consolidation right now, so I currently don't really have much of an edge. If we are able to come up a little bit higher to the $13.10 range, that would obviously give a trader a lot more edge for possible shorts. We do see a little descending zone, but even if we draw it right there, we don't see that the price is hitting it, even if we have the trend line touching the body of the candles, let alone if we get it touching the wick, it's not even close. So we don't really see a trade on BNB because the price isn't at a favorable area to be looking for shorts. Ideally, you'd want to see the price come up a little bit higher to around $13 at a minimum. Then you'd be looking for shorts because we've seen the price reject the $13 zone not just once, but twice. So the third time, you've seen it happen twice, and we're in a very, very bearish trend. So the momentum's to the downside, the sentiment's to the downside, the price action is in a consolidation and has already rejected the $13 zone twice. We're probably going to get some level of rejection at around the $13 zone if we interact with it for BNB. So right now we're not going to be taking any action on a Binance coin, but if we do see the price come up a little bit higher, we're going to be more interested. But at this time right now, we have no real interest because we have no real edge on BNB. All right, next thing is going to be Ethereum. Possible short entry. It looks decent. Let's just talk about it right here on the snip. Definitely looking a lot more like a short in my personal opinion. We see that we have formed a high, lower high, lower high, lower high. So we're making lower highs, and then we also broke the higher low structure. Here's the anchor. A little bit of noise here with the body candle closing below it, but we see rejection, 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 and then we see retest, and then another retest right at that zone in confluence to the previous major level of support. So it's a pretty key zone where we're currently at around $132, as well as we broke the ascending zone, which is a bearish indication. So overall, it does look like a good opportunity for a short, but I'm personally just going to be looking for BTC for any short plays. Ethereum will basically move the same direction as Bitcoin. So if you're looking to short Bitcoin, you're going to have a short bias on Ethereum as well. But I'm mainly just looking at BTC for a short. But if we are looking at Ethereum, first level where Bitcoin's at 58, Ethereum is going to be around 125, and then your major level of support, you got two. One's going to be just above 100. Let's just say psychologically it's going to be 100, and then you got another one at around 85. So those are going to be your two major zones, $100 and around 85 for your major key levels of support for Ethereum if it does dump back down to the downside. Let's just take a quick look at what's happening for BTC, because if you see a little bit of a drop, if it does break below the zone, we'll be definitely a little bit more interested. But right now, let's just continue on with our analysis. Next thing on the list is going to be Link. Link, like a lot of our alts, is in a squeeze, but has already broken our ascending level of support. Broke it. We didn't really see a retest of the zone, but we also see this descending zone anchor point 1, 2, 3, 4, and now we're getting our fifth touch. So we see that this zone is pretty well respected for the sellers, and we also see a horizontal zone right around here. So we are getting a squeeze in the price, although we aren't seeing that momentum kick in. I do think if we do drop below around $1.95, I think, at this level of support right here, if we do drop below this zone, we'll probably have a pretty sharp drop to around $1.50 pretty quickly, because that gap will probably get filled, because we see that every single time. Like look at example right here. Once this dropped, it instantly went to the next support zone. I expect something like that to happen for this upcoming drop if it does come into fruition, so we have to be acting pretty quickly. Although, we see weakness coming in, lower lows coming in lower highs coming in as time goes on. So you're getting weakness from the buyers, not able to push the price, making a higher high. So you're inevitably probably going to get a rollover to come and test that $1.55 range. So that's going to be the opportunity for Link. Let's just quickly look at the 1 hour to see if we can find anything. We got this minor level right here that I can easily just see right now. And then we're just in a small consolidation right here. I don't think we'll be hitting this range, but this is going to be the top range that we still could be hitting, and we're still within the squeeze, but I don't think we're going to be hitting that zone. And we have also another minor level within that previous support. So we're in a nice market structure ranging market right now. I think an option could be if we are assuming that this is going to hold like we saw right here. We saw the price really hold that projection just at the low, and then we could see another rejection from the sellers at that zone. So if we are being a little bit quick with our entry and we don't mind giving a little bit of room, we could put a stop loss above those highs there, just right above this zone right here, like there, and then you'd be looking for the lows there. So 4-to-1-ish risk reward, pretty favorable, and that would be the trade that you would be taking because you're seeing weakness in the overall market. You did see a push up from the $2 range, so that's going to be a major zone that we're wanting to pass. But if it does pass that zone, we're going to see, I think, a quick tumble to that zone, and I think you can add more once it does go below the area. A more conservative approach is a retest of the $2 zone, so then you'd wait for a crack and hold of the $2 zone, and then you'd wait for the retest of the $2 zone as a new level of resistance before you jump right in. So that's going to be the opportunities for Link. This is going to be a pretty risk-on trade, whereas the more conservative approach would be to patiently wait. But I do think that BTC is a little bit more of a better short in the short term. Let's quickly see what it's doing here. Just in a little bit of a doji. Just chilling on the consolidation for probably for the rest of the day, it seems like. Alright, so now let's talk about XRP. It's actually been doing well compared to a lot of the other assets, but, well, digital assets we see. But I do have this well-respected ascending zone. We see anchor point right here at the low. 1 touch, 2 touch, 3 touch, so 4 touches in total, making it a dependable zone. And then we have the resistance, first touch, second touch, fourth touch. And this is a very, very nice candle closure rejection at the 4-hour here. So we can see that this is a valid ascending wedge right here. And I do think that we could get another drop all the way back down to around the 14-cent range, maybe even the 13-cent range. We don't exactly know. We do have a couple of major levels of support, but at the end of the day, if it does drop, I do think we're going to have another significant move to the downside. So that's going to be the potential for the drop for XRP, although XRP has been actually doing very well as an alt compared to some of the other coins that we're going to be looking at. But yeah, overall, I still think we're going to have another drop. Look at this. We saw a major move to the downside, correction, downside, correction, downside, big correction, downside. I think that it could happen. So we're going to be looking for that opportunity. Also looking at the horizontal zone of around 1846 and 1809. We see key level of support, new level of resistance. It wouldn't be a surprise if we got at least a double bottom to around the 13-14 cent range. So it would be a really, really good opportunity because looking at the potential trade here, we're looking at 20-25% move here. And if we're risking, let's say 5-6%, let's say, for example, on the trade we took on Bitcoin, we were risking 1.5%, 1.5% of risk. And then the trade that we got out of it was, one was 11% and another one was 7%. But if it actually broke to 58, we could have got, 20% moves. And we were risking 1.5%, 2%. That's a 10-to-1 risk reward, if you're looking at the high end. So yeah, precision is key, and I don't mind taking a couple stabs or a few stabs at an entry. I don't mind at all because I can size each time instead of having a massive, massive stop loss, and I have a 2-to-1 risk reward, and I can't put on as much size because I have such a big stop loss in place. So that's what we're going to be looking at for XRP. We are seeing a strong bullish recovery here, but that recovery, I think, will get slammed back down if BTC does see some momentum back down to the 5s or even lower, like the 5K range or even lower. So that's going to be XRP. Last one of the day is going to be EOS. Let's go on to the 4-hour. Because in my view, the 4-hour is just easier to view for the market structure that we're currently seeing. So in my view, very easy to understand market structure we have for EOS. We have a very strong level of support at around $2.13 or 14-ish cents. key level of support, and then we got some lower highs held by a projection with an anchor point at $2.66, and then we got some lower highs squeezing the price towards the support. So very simple descending triangle. We're going to play it like every other descending triangle that we've seen, that we've played thousands and thousands of times over. Not much more to say than that. Yeah, we're just going to be looking at EOS as a potential sympathy play or even a front runner depending on how it's reacting, but we're going to be looking at that because it's a very well respected pattern that we can definitely have an edge trading. So that is going to be the crypto market update. We really hope you enjoyed it. So EOS looks like a good opportunity. XRP looks like a great opportunity. Those are going to be the two ones I'm going to be looking at. BNB, not so much. Ethereum, somewhat. Link, somewhat. But the two alts that I'm going to be looking at is going to be XRP and EOS. And Bitcoin obviously is going to be the main focus for my crypto trading, like it should be. It's going to be the most dominant, most impactful asset in the entire cryptocurrency market. So it's always vital that you're looking at BTC. So that's going to be the completion of the crypto market update. We will be taking on every single question within the comments, but I will turn off the crypto market update now. So for everyone watching the recorded version on YouTube, thank you very much for watching. Hopefully you got something from our crypto market update. If you have any questions, drop them in the comments section below, and we really hope that you subscribe so you can continue getting this education, entertainment, second opinion from another trader who is super active and passionate about the markets. So thank you very much for your time, and until next time, have a good one.